Okay, I think someone was speaking. The line went off.
Yeah, yes, sir.
Yes, boss. Please
Yeah, I
continue.
was saying that I think accountants in Ghana, I think one or the other, we understand your role in business strategy, because now the whole accounting has moved from that number crunching that we know to more of advisory. And but for the few places that I've worked, one thing I've realized is that due to the nature we most of our business people run their businesses, especially those who are running like that of sole proprietor. Even the business has been registered as a company, a limited liability, but the administration, the running has changed to that of a sole proprietorship. So if it's not much of a company which corporate governance is really working, but when it comes to the other aspect of businesses, like in Ghana, where we have most of our businesses operating well, more of a sole proprietorship and everything, becomes difficult for the accountant to even be recognized, because most decisions will be taken in the bedroom and then will be imposed um, on the company. So
Yeah.
the accountant even have a lesser say. The accountant has a lesser say. And then, so in this case, it becomes difficult for him to even really be concerned about performance and everything, and
Mm.
how to advise and those kind of stuffs. Even when it comes to expenditures and everything, the person will be there and the expenditures are even going on. So the only thing that you can do is just to take statement and then be doing reconciliations and then preparing report, as my brother earlier said. You just be preparing reports and then preparing statements and everything. So being allowed to become core advisor, or maybe to take part in decision making, and also it becomes difficult unless the few companies that we know that corporate governance are really working. Yeah.
That's a very, very good point. That's a very, very good point. So the role of an accountant has just moved from, so just something to keep in mind, right? That's why you're learning strategic case study.
Mm.
It has moved from number crunching. Okay, you debit here, you do this. Okay, this number is this. This, what does it mean? That's what we want. If you go to the boardroom, we want to know what are you saying? What are you meaning? That's what we need. We don't need a plenty. Yes, we know that accountants are smart. Mm. We know that accountants are smart, yes, but we want to focus. We want to keep our, we want to understand, sorry, we want to understand the strategic context. So accountants and the accounting function have some role in business strategy, but the extent of their involvement depend on what we call the attitude of the accountant. You know, the attitude of the accountant. You go to some companies, the accountant, all he's doing is just reconciliation. He doesn't know what the business is doing, what they are trying to venture into, what their market is, what market they are trying to enter. He's just doing his reconciliation. Traditionally, accountants have been associated with a culture of taking the safe option and avoiding risk. Whereas successful business strategy depends on being entrepreneurial and taking risks. You have to take risks. You have to take risks, you know. Also, traditionally, accountants have been associated with judging the merits of any investment on the basis of financial return. So, for example, when you take an issue to a project to an accountant, a typical accountant that doesn't look at things contextually, they only judge it based on the financial returns. That's all they'll do. And they'll look at things from a short-term point of view. Okay, how much cash is this making in 2 years? Very, very short term. But what they fail to look at are the non-financial factors. If accountants are going to be involved in business strategy, then they need to accept the long-term nature of many strategic decisions. They need to be able to accept that. They need to be able to accept that. That's extremely important. That's extremely important. Extremely important. The role of the accounting function in corporate strategy includes providing systems for recording financial transactions, preparing financial reports, providing management information systems. So the accountants should be able to organize information in such a way that management would be able to latch onto it, and make decisions that will drive the growth of the business. Very, very key. Very, very key. They can also assist, the accountant is also supposed to assist colleagues or help colleagues in research and development and marketing new products, right? So the accountant is seen more of as a partner, as a collaborator within the organization, where they assist the R&D team when it comes to product development and gives insights, about in terms of decisions about whether to develop and market a new product. The accountant today is more of a finance business partner, working with marketing colleagues also to assess the effectiveness of marketing initiatives. So the initiatives you see, all over on billboards. For example, an MTN was coming out with Minsako, I don't know the name of that initiative. I'm sure the accountants had to sit, depending on the culture, and MTN had to sit with the marketing team, try to assess the effectiveness of this marketing initiative and all that. So the accountant here has to, if you look here, he should not only be solid on his consolidation, reporting, and co. He should also be solid in business strategy, in a little bit of marketing, a little bit of HR, a little bit of strategy, not a little bit, but a lot of strategy, to put his accounting knowledge in context. Any questions?
Hello, sir.
Yes.
Okay, so I don't know if it's a suggestion or it's. I'm also thinking that sometimes the accountant focuses on its core job, and it also depends on how the other functions of the business involve them, because normally they are just supposed to produce the report so that decisions will be made. So I think that if the organization is in such a way that views are welcome and all the functions are working and they are collaborating with each other, then the accountants can also have views in other aspects. So if the accountant is not involved in what is going on in the organization, I see it to be beyond the accountant be reluctant to help in the success of the strategies that are being implemented in the organization. So at times, it also depends on the other functions of the organization as well.
Okay, so that's also it. So you're saying that sometimes it depends on the culture in the organization, whether there's a collaborative culture in the organization. There are some organizations where people work in silos, right? So this function is doing their own thing, this function is doing their own thing. In such organizations, it becomes difficult. So that's what you're saying, right? I think is that what you're saying?
Yes, please.
Yeah. Okay, yeah, that makes sense. But what we are trying to say here too is that the culture of collaboration should be there. The culture of collaboration should be there. But these what I'm mentioning is the 21st century expectation of what an accountant should be, or who an accountant or a finance person should be. Accountants should be able to, go beyond number crunching or crunching numbers to actually serve as a support or be able to help drive decision making. Okay, let's look at R&D strategy. R&D strategy. So for a lot of us, when we think For a lot of us, when we think of research and develop, when we think of R&D, we think of it in terms of developing new products, but there are different ways development could happen, right? So number one, let's look at what we call product renewal. So when you change the design of the product, you are helping to renew or prolong its life. So that's why I think Kingsley was mentioning about the maturity phase, where you redesign the product. I think redesign, I'm trying to remember, can anyone give me an example of that, of any product renewal, any product redesign? I'm trying to remember an example, but it just escaped me.
Sir,
Yes.
can the product renewal be mainly the aesthetic change or the the cosmetic change? For instance, mold used to be the scope, like so it became the shaped bottle. Can we look at that one?
Yes. So it can be it can be aesthetics, or it can actually be functional. Yes. So that's also a form of innovation. So what Mort was trying to do, so that's a good example. What Mort was, and does anyone know? So what did Mort do again? Just share with us. What did they do?
Okay, apart from the cosmetic change,
No, not like you said the bottle.
Yes, the bottle. Yes, usually it used to be like some rectangular shape B with a mouth, but now it's more or less like contoured hourglass.
Why do you think they did that?
Okay, you realize that it got to some time because Coca-Cola had that that shape, everybody was like, oh, Coca-Cola shape. So like the first thing, oh, Coca-Cola. So Coca-Cola was virtually on everybody's mouth. So they're like, at least they should make a shape where they can, I don't want to, they can, everybody can easily talk about it or something like that. Yeah, so it's
and also the reason why, another thing they do that is so that it's easy to hold. The bottom must be easy to hold, so when you are holding a bottle, like, you must get a full grasp of it. But all those things we are trying to change the design of the product, and when you change the design of the product, it looks new in the eyes of the customer, and then it helps to renew and prolong its life. So that's very, very important. Okay. Now let's move on to product adaptation. When we say product adaptation, what do we mean? What do we mean by product adaptation? So by product adaptation, we are adapting the product to a new market segment. So let's say Chocho cream is for the Ghanaian market. Chocho cream. I don't think Chocho cream is in Canada, or it's in the UK, or it's in America. So once you want to adapt Chocho cream to a new market, let's say the Canadian market, that's what we call product adaptation. It's also a subtle form of like innovating. It's a subtle form of innovating. So what I said here, for example, a product that is marketed successfully in the US might be adapted by its manufacturer for sale into Europe, where customer needs might be different from those of US customers. So you might maybe tweak it a little bit and push it to that market. Okay, then you also have developing new technology. So from time to time, you develop new technology. That's also a form of innovation. Then you have developing new products. New products, as we all know, are continually developed. But what you should know is that when you're developing a new product, the likelihood of failure is high. The likelihood of failure is high. So that's something to take note of. The likelihood of failure is very, very high. Very, very high. The likelihood of failure is very, very high. So when a product becomes successful, and it's you are the first to develop it, you become a market leader in that field. Now let's look at R&D as a function. In some industries, business entities establish a research and development department. Okay, so if any of you have an R&D function or department, say yes. If you don't, say no. I'm just trying to check something. If your company has a research and development department, say yes. If it doesn't, say no. Very, very simple. Simple instruction. Okay, so no one has an R&D. That's interesting. Wow. So in some but it's not in all industries that have a research and development function. So in some industries, business entities establish a research and development department where they would have research laboratories and all of that. So for example, industries like the pharmaceuticals, that's an area where you have research and development. So this vaccine like this that's out, there was certainly a research budget for it. There was a research team, a research function that was constantly studying how to combat this coronavirus pandemic. Some industries do not need a research and development function. However, entities within these industries must have a way of developing new products. So their strategy will be that they'll have product design teams. Now let's look at R&D strategy. First of all, you need to know as a company how much you spend on research and development each year. How much are you going to spend on R&D each single year? That's something you should know. How much will you spend on R&D each year? So a decision has to be made about how much should be spent on R&D each year. The need for R&D spending will vary between industries. High spending is needed in industries that are the leading edge of scientific or technological development. Then once you've determined how much you want to spend, now you have to allocate that capital efficiently. All part of your R&D strategy. Then one of the things you should know is that research and development, you have to give room for failures, because it's not all of your research that will lead to the creation of a product, or some of the research might not lead to any specific product development. Some of them will fail, some of them will fail. And because R&D does not necessarily produce a financial return, and it's kind of like a discretionary expense, most companies, you might be tempted to cut your R&D budget. Cut your R&D budget and invest into markets that you are more established in. But for example, if you're a company like Tesla that is driven by innovation, coming up with new things, you can't afford to do that. In companies where innovation is vital for long-term success, a strategy of restricting or reducing spending on R&D is likely to result in strategic failure. So if Tesla reduces their R&D budgets, they are probably going to suffer. They need money to invest into innovation, to go to Mars, to check out what's on Mars, whether we can drive cars on Mars and all that. Okay. Now you may have come across this, so let me explain it before I move into production strategy. In organizations, or in relation to organizations, we have what we call the intrapreneur and another we call the entrepreneur. Entrepreneur, intrapreneur, entrepreneur, intrapreneur. Very, very key. So who's an entrepreneur? An entrepreneur is simply someone who is involved in a business when it is first established. So they create a startup, a new company, a new organization. So they are huge risk takers, but they start companies. But who is an intrapreneur? Intra meaning inside the organization. Who is an intrapreneur? So an entrepreneur is someone who is actually within an organization or within a large organization, wherever it is, but he takes responsibility for converting new product ideas into profitable products. So an entrepreneur is simply like an entrepreneur within the organization. And companies should focus on these individuals who are entrepreneurs and give them the resources and on the authority to come up with innovative things and take risks, because they are crucial to the success of the organization. Now let's move on to production strategy. Production strategy. Any questions on the first part? Any questions? Okay. If there are no questions, then we'll move on to production strategy. Now let's talk about capacity planning. Capacity planning. So we all know that growth cannot happen beyond your capacity. That's why they say if you want to grow, you have to increase your capacity, right? For example, if today you tell Chocho Cream to supply the whole of Japan with Chocho Cream, they might not have the capacity for that. So capacity planning is very, very key. It's very, very key. A company that is planning to grow must have sufficient capacity, so you see, to meet the expected demand for its products. So what does it mean here? It means that you must have sufficient production plants. You must have, if you want to produce more, you must have more production plants to be able to produce. Or you could outsource production to someone. That's also a possibility. Now, so how do you do capacity planning? First off, you can do it in two ways. Number one is that first you need to determine the expected sales, right? Now, when you've determined the expected sales, then you go ahead and match production based on that. So for instance, if you know that your expected sales in a Christmas season increases, right? If you know that your production sales, your sales increases in December, then you need to increase your production too much. So in planning the required production capacity, you need to make decisions around whether you are going to increase your production in relation to an increased sales demand and decrease your production in relation to a decreased sales demand. That's one scenario. That's one scenario. Second scenario, you also need to determine, this is another strategy where you need to determine whether there should be a steady level of production output, right? So if there's a steady level of production output, it means that production is the same throughout, it's steady, so that when sales demand drops during these times, you are able to keep the extra inventory that you have left in your warehouse so that when sales increases, you're able to supply customers. So two scenarios. First scenario, increase production to increase sales, to meet sales that is increasing. Decrease production to meet sales that is also decreasing. So you are changing your production levels based on your sales demand. And there's also another scenario where you are keeping your production level steady, the same, So these are the two scenarios. Any questions on this? Okay, looks like there are no questions. Okay, then let's move on to production resource planning. So a manufacturing company must also plan to obtain the resources that it will need each year to meet the required capacity levels. So there are certain resources you need to produce. So first off, what are some of the resources? Number one is the technology. What kind of technology do we need here? These days, there's all kinds of things, artificial intelligence, robotics, and all that. All kinds of things. The second resource that you may need is the capital equipment. Another resource is the capital expenditure. Very, very important. Then also the production employees. You need human beings to be able to help you to produce. So these are 4 kinds of resources that you need to plan around when it comes to your production resource planning. Any questions on this? Any questions? Seems I'm the only one talking. Okay, since there are no questions, we'll keep moving. Now let's talk about quality, lead time, and flexibility. And it's the relationships these 3 things have with costs. Production cost measurement is a responsibility of the cost accounting function, but the production function is responsible for planning production in a way that optimizes costs, consistent with other strategic production objectives. Very, very important. Very, very important. So now let's look at cost versus quality. What do you think the impact of cost is on quality? What do you think the impact of costs is? What impact does cost have on quality? Basically, that's what I'm trying to say.
So, sir, can we say basically, on the layman's perspective, cost has a direct impact on quality. That means that, the higher the cost, the greater the quality, and the lower the cost, the lower the quality.
Okay. So if you summarize it, so cost can possibly be reduced by using cheaper materials to make the product, or even using cheap labor. So if you want to obtain a high quality, you need to spend more. So you need to get more in costs. What about cost versus lead time? Anyone knows what lead time is? What is lead time? Lead time. Lead time, please.
Lead time is the time between ordering the product and receiving the product, product or raw material.
Okay, so lead time is the time between receiving an order for an item and the time needed to make it and deliver it to the customer. So if the company wants to minimize production lead times, it will have to incur higher costs. I think that's logical. If you want to get your products faster to the customer, you need to spend more in your delivery mechanisms, or even how you make it, how efficiently you make it and all that. Then you have cost versus flexibility. So flexibility is simply switching from one production operation to another. So if you want greater flexibility, that will involve higher production costs. Very simple. Now let's move on to HR strategy. Let's move on to HR strategy. So what's human resource strategy? Human resources are a key resource. The success of a business entity depends on the skills and experience of its human resources. A critical success factor for an entity might be to have at its disposal sufficient human resources with the necessary skills. So human resources is very, very obviously very important. So what are the objectives of having an HR strategy? Is it even important? Why are we worrying ourselves with HR strategy? Is it even important?
Yes, I believe so.
Okay, why is it important?
If we look at the 7 P's, people are part of it. And if you even look at the McKinsey 7S, you realize that we see staff. So that shows the importance of the type of people we need in in attaining the organizational goal or achieving the organizational goal. Because the wrong people will lead to the wrong product. Yeah.
Okay, that's very, very true. So a responsibility of the human resource management function is to assess the quality and the quantity of the human resource available. So you're not only looking at quality or quantity. So how many people do you need? And what is the skill set you require? So you have to consider ways, if there are any vacancies, you have to consider ways of filling the gap and ensuring that the organization has the human resources that it needs. The objective of a human resource strategy is to ensure that the human resources are available as required. Now let's talk about human resource planning. A human resource plan is simply a forecast of the human resources that will be required at a given time in the future. So it's basically a forecast of basically the quantity and the quality of employees that you need at a given point in time. What are the stages in the planning process? First of all, you need to understand the corporate objectives of the entity. So it always starts with the big picture. Then you need to understand, you need to do what we call demand forecasting. Here, the required numbers and skills of human resources should be estimated. Estimates of requirements should allow for any expected changes in technology, including the introduction of labor-saving equipment. So the demand of employees should be forecasted. Then you assess current resources. So you need to know what you have now. You should assess. It looks like someone has a question. Is there a question or anyway? You should assess current human resources and what might happen to these existing resources year on year. Anytime you're assessing current resources, you should factor in turnover and wastage. Then you have to prepare policies and plans. The final stage in the planning cycle is to develop policies and plans to fill the gap between the numbers that are required and the forecasts. These plans will include recruitment of new staff, training and developing, performance appraisals, and all that. Now let's move on to the marketing mix. Hey, why is it that we have a... Let's move on to the marketing mix here. What? How come I have all this to cover? Okay, let's move on to the marketing mix. So just give me a second. So marketing is simply a process of you identify the customer's wants, you design products to meet those wants, you create awareness around it, and then you persuade customers to buy that product. It's a simple strategy when it comes to marketing. You identify a need and you create a product to solve that need, and you market it so that customers can buy. In these days, people sometimes don't even some people say they create needs. They don't just identify needs, but they create needs. You know, they create needs. Sometimes you don't know that you need this. I can create something that you might like, but that's a conversation for another day. Now, what is the marketing mix? Of product, price, place, and promotion. I think we've talked about it in the past, right? But here we want to look at the product strategy. We are looking at the strategy surrounding it. So product strategy is concerned with designing new products or even designing new variations of existing products, you know, to sell to a different market segment or to renew interest in a product or to even create demand. So first off, you can design new products. You can design new products. You can design new variations of existing products, or you can, you know. So these are the two ways when it comes to product strategy. The third point is that the actual and perceived features of a product are very important in the marketing mix because it provides the value for customers. So yeah, that's a small addition to that. But always remember, when you are coming up with product strategy, it's in two ways. You design new products or you can design new variations of existing products. Very key. Now let's move on to the product strategy. Let's go in depth a bit. So their products will have several features. Number one will be functions. So